$600 stimulus checks are being processed right now, so you can expect them in your account in the near future. But you've probably laid awake at night thinking to yourself, man, I wonder if my stimulus checks are taxed, because that's what normal people do. Just kidding. I'm a CPA. My name is Greg Acton, so I'm going to break down whether or not stimulus checks are taxed and whether or not they will affect your return if they are taxed or if they aren't taxed. So if they are going to end up messing up your return and making it so you don't qualify for other tax credits, let's run through it right now. To show you how big of an implication taxes are, if you are a family of 4, you would have received $3,400 from the first round of stimulus checks and $2,400 from the second round of stimulus checks. That is $5,800. Now, if you are taxed at a 20% rate, obviously that can be a good chunk of money. So whether or not you are taxed is a huge deal. It is pretty dang rare that the IRS in the tax code will let you have your cake and eat it too. But the cool thing with stimulus checks is this is one of those instances. They allow you to have your cake and eat it too, meaning you get this stimulus check and you are not taxed on it. Stimulus checks are not even counted as income at all. So they are not going to bump up your income and then the IRS is going to give you a deduction to decrease your income. They aren't considered income at all. So these stimulus checks not being counted as income really means two things. One, you are not going to be taxed on it. But two, it is also not going to affect the eligibility that you have for other tax credits. There are other tax credits that you qualify for by staying below a certain income threshold. And since these are not income, it is not going to bump you above those thresholds, so you will still qualify for those other tax credits. Now, if you are just pure curiosity and you want to understand how they are not taxed and the different avenues that the IRS allows for things not to be taxed, I'm going to break that down real quick. There are really 3 different ways that you can lower your taxes with the IRS code. One is through tax deductions, one is through a non-refundable tax credit, and the other, the best one that you can possibly get, is a refundable tax credit. So let's break down what each of those mean. First, there are deductions to income, and that is where you say, okay, for example, if I made $50,000 and I had the standard deduction, which is $24,000, I'm going to reduce my income from 50 down to 26, and that remaining $26,000 of income, that is what I am taxed on. I will apply a tax rate to that and figure out my taxes. So you can deduct income off of your tax return and you are taxed on the remaining portion of your income. Now the next one, a non-refundable tax credit. This is a really good one because it actually takes your taxes. So when you calculate your actual tax amount, and then you have a non-refundable tax credit, it reduces your taxes. So for example, if I have $500 in taxes, but I have a $1,000 non-refundable tax credit, I apply that to that $500 and it takes that $500 down to 0. Now I have $1,000, but I only have taxes of $500. This is kind of like a all-you-can-eat buffet, but you can't take any leftovers home, right? You only get to take that $500. You can eat while you're there, but that's it. You don't get to take any home. Now, a refundable tax credit, that's a different story. Refundable tax credits are like the holy grail of tax reduction in the IRS tax code, and that is what these stimulus checks are. So a refundable tax credit can actually take your taxes all the way to 0 and give you money back. So they will refund you and give you money back. It is like going to an all-you-can-eat buffet and being able to take leftovers home. Awesome, right? You get to take all of your taxes away, and if you get down to 0 and then you still have tax credit left, boom, you're taking it home. So that is what these stimulus checks are for. Now, since you have received the money already, if you haven't, then you're going to get it in your taxes or it's being sent out now. But If you have received your stimulus check already, then it's like an advanced payment of a refundable tax credit. So the IRS is saying, okay, yes, you are going to receive this refundable tax credit, and we're going to pay you for it now so that you don't have to wait for it. So this is one of those rare instances where the IRS allows you to have your cake and eat it too. You get this refundable tax credit. Now, since you're getting paid on it now, really, it has pretty much a zero implication on your tax return. Yes, it'll be on it, but it's just going to net to zero. It's going to say, yes, I'm getting this. Yeah, I've already got it. Okay, now this is my normal tax return. So it's going to have pretty much no impact on your tax return. If you make consistent income and you have the same withholdings as you had last year, then yeah, don't expect a huge difference in your tax return. If you haven't received any stimulus checks, but you do qualify under those income thresholds, you can still apply it to your tax return and be able to receive those stimulus checks. So you're going to be able to claim those credits, and they are still going to flow through your tax return. You're just going to have to wait until you file your tax return. I hope you found this video helpful. Go and spend those stimulus checks responsibly. Use them to invest. Use them to pay off debt. Use them smart. We'll catch you guys next time.